Let's check in on the markets now. Business reporter Ed Boyd joins me. Ed, the market fell into the red this morning. Did it recover?
It did recover, Kieran. The ASX 200 was in the red earlier today, but it finished up about 0.6% at this afternoon's trade. So today marks the 1st of July and it marks 1 month until profit season. Most big ASX listed companies will be reporting their profits in about 4 weeks' time. And one of them is Lendlease. And today it issued a profit warning saying COVID-19 has affected its business, particularly its international development business. And Lendlease said today that it now expects to make a statutory loss of about 230 million to 340 million after tax this year. So Lendlease is just one of the first companies to issue a profit warning, really just explaining the impact of COVID-19 on its business, and they're definitely not going to be the last, Kieran. I think we're going to see quite a few more profit warnings over the next couple of weeks as we head into the profit season in August.
Absolutely. And Ed, CoreLogic have released the latest house price data. What have we seen?
Yeah, so after falling 0.4% in May, house prices in Australia fell 0.7% in June. And if we take a quick look at this chart, you'll see prices for the capital cities over the past month, past 3 months and past year. And you'll see over the last 12 months, prices in Perth and Darwin have fallen, while the other capital cities have all still grown in value. And the biggest growth has been Sydney at 13.3% and Melbourne at 10.2%. And if we have a look at this next chart showing property listings, you'll see there's been a huge surge in listings in May and June. CoreLogic say sales activity jumped almost 30% in June. 2020 is the orange line on the graph there, and you can clearly see it spike sharply in both May and June after dramatically falling in March and April. And as for the property price fall in June, CoreLogic say a number of factors prevented house prices from falling dramatically, mainly the low levels of stock, record low interest rates, and banks giving home loan customers repayment holidays. So my guess is property prices aren't going to fall 20% this year, which is what some people were predicting a couple of months ago. But the key thing for the property market will be September, when those bank home loan holidays stop. Will that force people to potentially sell up their homes and potentially drive down prices further? But we'll have to wait and see, Kieran.
Yeah, the bank loans, the government support, all at that time. Thank you, Ed. Talk to you soon.